thank you all for your attendance today. Let's start with the agenda. So there are a few subjects I would like to touch upon today, and this is by no means an exhaustive presentation. So I've picked four. Sorry, there is something in the background. I don't know where that is coming from.
I am gonna do like this. I'm gonna mute all the participants,
please,
and then whoever has question, you can
okay,
use the chat.
Yeah. So what Josie's gonna do? She's gonna mute you panelists because there is some noise in the background that is making it hard for me to concentrate. So as discussed earlier, if you have questions, please type them in the questions or in the chat section. And I suggest that once the presentation is done, she unmutes you, and then I will try to answer your questions, and then you can also use the audio again. So once again, thank you all for attending today. I have picked 4 subjects I would like to touch upon today, and again, I reiterate, this is by no means an exhaustive presentation. So what I would like to focus today on is a little bit about the EU IMO delegation agreement, which is the legal basis for all of this. It is the legal basis of the project. It is the legal basis for our contracts with the MTCCs. Then further on the IMO MTCC contracts, the subject of procurement. And when I say procurement, I mean the broader definition of the term, so not just the procurement of goods, services, and works, but also the procurement of travel and recruitment of experts. And following that, I would like to finish with this issue of acceptable expenditure, or also sometimes called eligible and ineligible expenditure. So, what is the EU IMO? What the EU IMO delegation agreement basically details how IMO is entrusted by the European Union to implement the action capacity building for climate mitigation in the maritime shipping industry. This means that IMO is the delegatee of the contracting authority, i.e. the EU. Now, for IMO or any other international organization, for that matter, to be able to sign these kinds of delegation agreements, the organization had to successfully complete something called a pillar assessment, i.e. entities wishing to work with EU funds under the indirect management mode, so we are under the indirect management mode, must successfully pass a pillar assessment. Who can these entities be? So the list is rather restricted. Entities can be third countries or the bodies they have designated, for example, Ministry of Interior, Kingdom of Cambodia, international organizations and their agencies. So IMO falls into this second category. So UNDP, United Nations Development Program, is another example. I have previously worked for the European Bank for Reconstruction and Development. They have also passed the pillar assessment, and before that I worked for the International Center for Migration Policy Development. They had also passed this pillar assessment. So those are just some of the examples of international organizations. Public law bodies like DFID here in the UK or KfW in Germany. Bodies governed by private law with the public service mission to the extent that they provide adequate financial guarantees, for example, the British Council. I think into this last category, GIS in Germany would also fall into. So these entities must meet certain requirements in up to 7 areas relating to the internal control system, the accounting system, an independent external audit, and rules and procedures for providing financing from EU funds through grants, procurement, and financial instruments and sub-delegation. So a little bit more on this 7-pillar assessment, just for your information. So the assessment is always done in accordance with the criteria set by the European Commission. And so the 7 pillars refer to an efficient internal control system. The entity must use an accounting system that provides in all material respects accurate, complete and reliable information in a timely manner and in accordance with the criteria set by the European Commission. The entity must be subject to an independent external audit. It must apply appropriate rules and procedures for providing financing from EU funds through grants and in accordance, again, with the criteria set by the European Commission. It must apply appropriate rules and procedures for providing financing from EU funds through procurement and for providing financing from EU funds through financial instruments. So financial instruments were applicable while I was working for the EBRD, so a development bank. We received these financial instruments and has taken measures in all material respects which ensure that sub-delegates and financial intermediaries to which the entity sub-delegates certain budget implementation tasks will implement EU-funded actions with systems and procedures that comply with international standards and again with the criteria set by the European Commission. So I have personally witnessed a 7-pillar assessment while I was at the ICMPD. It's a lengthy and tedious procedure, like most procedures with the ECR, and it took us, I think, first of all, the first round of assessment, we failed in, I think, 2 pillars. So the organization was not allowed to sign proper delegation agreements, which were at that point called contribution agreements. So a renewed assessment had to be done, where the organization managed to pass the 7 pillars. I think the whole thing took about a year. It's huge amount of documents which need to be submitted, and also, which I found interesting, some new rules and regulations actually had to be written for this purpose. So during the assessment or during the preparation for the assessment, ICMPD realized that they had not actually catered to all of the rules and procedures that need to be in place for them to pass the 7-pillar assessment. This is done by an external auditor commissioned by the Commission. Okay, a little bit more on the EU IMO delegation agreement. So the implementation period as set in the agreement is 1st of January 2016 to 31st of December 2019. A very important date because this is basically the last possible date to finish any activity pertaining to this delegation agreement, which in essence means also any activity pertaining to the contractors, i.e. to the MTCCs. What does this mean in terms of the one question contractors, vendors always ask me is, well, what does that mean in terms of payments? So in terms of paying outstanding invoices to vendors, contractors, these can still be undertaken at the beginning of 2020, should be done also in January 2020 and not, in June 2020. However, all activities must be finished by this date. In addition, any outstanding invoices cannot be dated with a 2020 date. So all invoices, again, vendors, contractors, experts, staff, whomever, the last possible date on an invoice needs to be 31st of December 2019. This is something a financial auditor will look at very closely, and you would be surprised that how many times it happens that actually this rule is somehow forgotten about during implementation. Okay. Furthermore, what I would like to highlight from our delegation agreement with the EU is that these provisions and the selection and contracting with the host institutions of MTCCs is conducted in accordance with IMO procurement rules and procedures. So this is a reference to the successful bidding procedure that the 3 MTCCs won. So in line with IMO's procurement rules and procedures, the host institutions are considered contractors. So this is why in all of your contracts, the respective host institutions are the legal term, they are considered contractors. Okay. So on to the next agenda point. Sorry. Which is the contract between IMO and the MTCCs. The contract. Sorry, Josie, can you mute someone, whoever is? Thank you. Sorry about that. So, in accordance with the IMO MTCC's contracts, the contractor will provide services in the framework of the implementation of the IMO EU project entitled Capacity Building for Climate Mitigation in the Maritime Shipping Industry, so the project in your respective region. The contractor shall be responsible, so i.e. the host institution, for the performance of the obligations under this contract with a due professional degree of care and diligence, which means that it has followed its regulations and rules with at least the same level of duty and care which it applies in managing its own funds. In other words, this is a service contract between IMO and the respective host institution, i.e. the contractor. So the key word in the first provision is services. The key word in provision 4.3, in Article 4.3, is its regulations and rules. So what does that mean? Essentially, it means efficient internal control, that there is an efficient internal control system in place, that the host institution uses an accounting system that provides in all material respects accurate, complete and reliable information in a timely manner, and is subject to an independent external audit. Now, on to Article 19.1. The contractor shall keep accurate and regular records and accounts of the implementation of the contract. The accounting regulations and rules of the contractor shall apply, provided that these regulations and rules conform to internationally accepted standards. Financial transactions and financial statements shall be subject to the internal and external auditing procedures laid down in the regulations and rules of the contractor. The famous Article 9.5, the contractor shall conduct annual audits by an external auditor of the activities related to the implementation of the contract and make audit reports available to the organization. So this means, in terms of the independent external audit, that the contractor applies appropriate rules and procedures in all material respects through procurement, expenditure on goods, services and works bought in from external suppliers. So just a short side note on goods, services and works. I'll talk about procurement a bit more in a minute. So goods are defined as tangible or material items which can be consumed, for example, office and IT equipment, consumables and supplies, such as office stationery. Services are actions individuals or organizations perform which confer a benefit but do not result in the ownership of anything. Typical consultant services, thus we talk about recruitment in terms of services, but also logistics services outsourced to, for example, travel agencies. Thus we talk about the procurement of travel. Constructional works include projects such as the construction, alteration, repair, maintenance, and demolition of buildings or structures. May, however, include also related goods, materials and components, and services, design, surveying, and engineering. So the IMO MTCC contract is a deliverables-based service contract. It refers collectively to all actions and activities that the contractor shall accomplish as defined in Annex 1. Annex 1 is the annex detailing your respective deliverables. So what does that mean? Deliverables-based service contracts are also sometimes called output-based or global price contracts, meaning that the contractor is paid a maximum lump sum against the performance of certain outputs, or as in our case, as per Annex 2, a set of lump sums against successful accepted delivery of certain milestones. The term deliverables refers collectively to all actions and activities that the contractor shall accomplish as defined in Annex 1. Sorry. Article 5.1 goes on to detail that the organization, i.e. IMO, shall pay the contractor in accordance with the payment schedule set out in Annex 2, subject to submission of a valid invoice, supporting documentation, and acceptance of the milestone by the organization. Okay, now I would like to talk about a bit more about procurement. And so I have taken two examples because I think it's always good to have actual examples from practice. So on the one hand, I will talk about a bit about IMO's procurement rules and procedures, which we apply, IMO HQ, and about CIPS, which is the Chartered Institute of Procurement and Supply here in the UK. So IMO's procurement rules and procedures are designed to ensure that the organization achieves value for money in its procurement, that goods or services purchased best meet the organization's requirements, and that they are delivered on time, to the right location, and in the right quantity. Similarly, CIPS talks about the 5 rights of procurement, i.e. quality, quantity, time, price, and place. Meaning basically that buying goods, services, or works of the right quality, in the right quantity, delivered to the right place, at the right time, and at the right price. In practice, and you will be of course aware of this, what happens is that often concessions need to be made between these 5 rights, depending on what the organization's requirement specifies for the individual procurement. IMO's procurement rules and procedures then further go on to describe that the lowest price does not necessarily offer the best value for money. Instead, decisions on best value for money are influenced by a number of factors, including quality and suitability, market maturity, performance, risk, financial and contractual considerations, and disposal costs when dealing, for example, with equipment. CIPS defines value for money as the optimum combination of whole life cost and the quality necessary to meet the customer's requirements. So, on an example of the procurement of IT equipment, which you have all done and which I'm sure you will do again in future. What to do will largely depend, of course, on the respective contractors' procurement rules and regulations. So in terms of thresholds, minimum number of offers to be requested, whether the procurement needs to be done on a local or international basis, whether requests for proposals suffice, or a large-scale invitation to tender needs to be launched, etc. So in procurement terms, we talk about the right process. However, most rules and regulations, certainly the ones I have come across, seem to agree on a few basic principles considerations. Namely, the need for a detailed specification. Specification can be simply defined as a statement of the requirements to be satisfied in the supply of a product or service. Added value is achieved through an effective specification because it clearly and should clearly define the requirement, communicate the requirement, minimize risk and cost associated with doubt and ambiguity, provide a means of evaluating the quality or conformance of goods or services, and support standardization and consistency. In procurement terms, we talk about the right need. However, care should also be taken not to over-specify, specifying unnecessary features and quality. In most cases, the lead role in specification development is taken by users of the product. So in our example of the procurement of IT equipment, IT officers would be closely involved in drafting the specifications. So then other examples are designers and engineers, so technical officers. Thus often the IT equipment specifications will be developed in close cooperation with the respective IT department or IT officer. Furthermore, IT departments of big organizations in cooperation with their procurement department or officers will have maybe done a large volume procurement and signed a framework agreement with one preferred supplier. For example, many organizations use Dell as their framework supplier. And then users can purchase from this one supplier as per pre-agreed specs without having to undergo a new procurement process each time. Which brings us to the next important consideration, which is the right supplier closely connected to the right relationship. For example, a framework contract with one supplier, which entails yearly performance reviews and discounts. On the other hand, if, for example, you were to receive some grant funding and the grant agreement already specifies a certain kind of IT equipment, or more often a specific software, for example, data collection, to be procured, you will need to launch a new procurement process. Which brings us to the final consideration, which is the right process, which is also the one we started with. So I've put in here just a few simple advices for me what not to do. Like, for example, buy from Apple because you like their devices and they are pretty, or you use Apple products privately. Because what can happen is that unless there is adequate evidence to show the correct procurement procedure was applied, auditors might question certain expenditures and declare them ineligible. And with that word, ineligible, we turn to the final agenda point for today, which is the issue of acceptable costs, or also sometimes called eligible costs. Again, I am detailing here two examples. So how does IMO define acceptable costs, and how does our donor, the EU, define acceptable costs? So following the procurement process, IMO recognizes expenditure on a deliverables basis, i.e. through the IMO procurement process and adherence to it, acceptable expenditure is identified. IMO shall accept expenditure for which funds are available, the rules and regulations and procedures of the organization are being observed, the financial situation of the organization will not be prejudiced, and finally, the purpose of the proposed expenditure is in the interest of the work of the organization. The EU, and I have taken this from the general conditions for pillar assessed grant or delegation agreements, also called PAGODA, so that's the acronym. The contracting authority, i.e. the EU, shall accept expenditure which meets all the following criteria. It is necessary for carrying out the action directly attributable to it and arising as a direct consequence of its implementation. It is actually incurred by the organization, i.e. it represents real expenditure definitely and genuinely borne by the organization, i.e. recorded in its accounts. It is reasonable, justified, and complies with the principles of sound financial management in accordance with the organization's rules and procedures. It is incurred during the implementation period. And again, I would like to mention, you would be surprised how many times this rule is actually not complied with. It is identifiable and verifiable, recorded in the accounting records of the organization, and it complies with the applicable tax and social legislation, taking into account the respective organization's privileges and immunities. And so, as a final example, I have listed here, basically I have copied from an external financial auditor's report the compliance issues, reasons for certain expenditure to be declared ineligible. It's this small table in blue you see. And it is by no means an accident that the list starts with missing inadequate documentation as number one, and as number two, incorrect procurement procedure applied. So the worst thing that can happen to you is when you get an external financial auditor, an EU external financial auditor, is that you have no supporting documentation, so it's completely missing. What happens more often is that the supporting documentation is not substantial, that there are certain things missing and inadequate. And the second point, basically what will happen is the external auditor will take your financial rules and regulations, your procurement rules and regulations, will read them very closely, very carefully, and then literally compare with your declared costs whether you have applied the right procurement procedure. So that's point two, incorrect procurement procedure applied. Number three, expenditure outside contractual period. Again, I reiterate for the third time, you'd be surprised how many times this actually happens in practice. To a lesser extent, expenditure includes VAT and other taxes. Incorrect exchange rate used, budget exceeded. By budget exceeded, I mean it is exceeded also beyond the tolerance threshold. So in delegation agreements, in grants with the EU, you always have a certain reallocation threshold. It's either 15% or 25%. So when they say budget is exceeded, it means you have gone beyond those that reallocation that you can do basically on your own, and that you usually only have to notify the Commission on a post basis. Expenditure not for project purposes. This means they will, the assessment of the auditors will be that you have purchased something and it is not really for an activity of the project. So it's not really for an activity described in the description of the action. Fraud and irregularities, income not declared, not reported. Okay, so I know this was quite a lot. Josie, you want to unmute our panelists? Hello?
Yes, we're here.
Hi. Hi again. So I know this was quite a lot of information. If you would like me to repeat anything, or if you have concrete questions, please go ahead.
Good morning.
Hi.
This is Yolanda.
Hi, Yolanda.
How are you? I'm sorry because on my computer I have some issues. So I would like to ask, did you says that you will be paid according to Annex 2, right?
Yes.
My question is the payment. We have to like we have to, ¿cómo se dice? We have to prove all the costs, the amount in the Annex 2, or we present an invoice and they pay us all the amount. I don't know if I explain myself.
So you have your payment schedule and you have your milestones, your deliverables here.
Yeah.
So, for example,
we have like communication and visibility plan.
Yes,
and
that's a good example. So that's
yes.
Deliverable 5.1 usually.
Yes. Yes.
So you have the amount that should be your amount to be invoiced, and
yes.
the supporting documentation for this milestone to be approved for payment is an approved communications and visibility plan.
Okay, but so it have to match all the costs to the amount?
No.
Okay, that's what my question.
This is what I mean by lump sums.
Yes, okay.
So I don't know now exactly what your lump sum is. I think it's 50, yeah?
Yes.
I think it's 50,000, yes. So once your communications and visibility plan is approved by Anton, and he always does this in writing via email, you can send me the invoice. And the invoice should be for the amount specified.
Oh, that's it. Now, another question. We have a procurement process because we are in the university, and the university is part of the government, and we have to use the procurement process that they use. That is a problem that we have to do anything else, or is according to what you were telling us that in this agreement of 2016?
Yes. So your host institution is UMIP.
Yes.
You apply the procurement rules and regulations of UMIP, and those happen to be the same as the government procurement rules and regulations.
Yes, they have a law, a specific law that covers all of it.
Yes, that's correct. Yeah, that is the procedure to be applied. Yes.
Okay. That's my question. Okay.
Yes, this is Eladio. I just have one question.
Yes.
What happens when there is a procurement that is
Eladio, you maybe want to type your question.
Right.
Hello?
Yes, hi. This is Eladio.
Hi.
Can you hear me better now?
Yes, I can hear much better now.
Okay,
yes,
excellent.
please.
So instead of typing, I'll ask the question.
Yeah.
My question was regarding eligibility of cost for goods and or services.
Yes.
What happens if or when a goods or services are deemed to be not eligible?
You mean following a financial audit?
Yes.
You mean in the case where the wrong procurement procedure was applied, or?
Well, say you have a range of possibilities.
Yeah. So as per my last slide, you have a list. There are a number of reasons why something can be declared ineligible. So I can just, I can speak to my experience with EU external financial auditors. So what happens is the Commission mandates an external financial auditor, and these are big auditing companies like Ernst & Young, PricewaterhouseCoopers, Moore Stevens. They notify you that they will do a financial audit, so they have to notify you at least 2 weeks in advance. Then they come and they sit for a couple of days and they audit your invoices and receipts. And they check against the applicable procurement rules and regulations. So in our case, because the host institution should apply its rules and regulations, that would be the rules against which to check. If irregularities, I'm not going to say, I'm not going to use the word ineligible immediately. If irregularities are found, they basically do a list, like you see here, this small table. Mm-hmm. They put in a short description. So here they would put in what the finding is, and here they would put in the suggested amount to be deducted, i.e. recovered. Mm-hmm. So the first column would be the finding, and the second, so they would put it under one of these criteria, and then here they would just put a bit more explanation why do they think this is the case, and the amount to be deducted or declared ineligible. However, that is not the final. So this is what they call the first round of comments. The organization or the contractor then has the opportunity to counter comment and usually to submit a further supporting documentation. So if we are talking about criteria 1, missing inadequate documentation, usually what happened from my experience, if there was a comment under this criteria and a certain amount to be found ineligible, the organization could still submit further supporting documentation and argue why they think, no, this is actually eligible. So the process when something is finally declared ineligible takes months, and it's not, the first round of comments. The worst case scenario is actually recovery. So a case where I had something declared completely ineligible and there was no way this could be declared as acceptable was, for example, when VAT was wrongly calculated. But that is just, a calculation error. That is not, it's not really ineligible expenditure. It's just a calculation error. Yes. Does that answer your question?
Absolutely. Thank you very much, Will.
Good. Any other questions?
Okay. Sybil, question here is as going further from discussion. So it means there, based on this final external audit, if there is a irregularity, there is a scope of EU recoverables, right? I'm just confirming on this.
Sorry, there is the possibility, and is really that is, the worst case scenario. Yes, that can happen, that the EC orders a recovery. Yes.
Okay, so and the second thing is one of these where we are seeing the compliance issue. One of the points is expenditure not for project purposes.
Yes.
So this is determined by auditor, right?
Yes. Yes. So what the auditor will do is they will take the description of the action, the work plan, where all the individual activities are detailed, and also this rarely really happens because you know what your activities are. So you would consciously need to, invent something new which is not in the work plan to fall under this criteria. I mean, why would you do that? So they will compare the activities listed in the work plan against the costs assigned to it, and if if they have, you know, if they think they have found something that doesn't pertain to an activity, then they will flag that. Yeah. I don't think I've ever had the case of that, to be honest.
Okay. No, means that again, this was for understanding. So
Yeah.
I understand it's much simpler as long as all the associated cost is under the cost lines as proposed. It is in order, right?
Exactly. Yes. As per the approved work plan. Yes.
Approved work plan and budget. So that's
yes. Yes. Yes.
So you will be sharing this PowerPoint
presentation.
with us?
Yes, I will share the presentation. Yes, of course.
Yeah, that will be helpful. And
yes.
Yeah, coming out of that, we might be having important point. We have noted down that all invoicing and activities must be completed before 31st December 2019.
Yes, yeah, it should be. So, for example, as per all of your payment schedules, there is a 5% retention. This 5% retention can only be paid at the beginning of 2020, for example. However, the invoice for this retention should be dated with the latest 31st of December 2019.
Okay.
Yeah.
The final, there is I think I'm just trying to open this in Annex 2. The final deliverable for say, as we are talking about final performance report, right? That is 5%. So that is the only one, correct?
No, there is also in the you all have, sorry, the 5% retention is not in the payment schedule. It's in the main text of your contract. So, and it's not a deliverable. That is just you know, sort of a little bit of security on our side. So you are correct. The last deliverable is the final performance report.
And whether that is 45 due within 45 days after completion of contract.
Yes,
so,
the report. Yes.
The report. Yeah. So we can invoice it before submitting the report.
No. I'm just saying. I'm just saying that the invoice should be dated with the 31st of December 2019. You understand? You can issue an invoice, generate an invoice, and you should with the date 31st of December 2019, the latest, if possible earlier. And but the actual payment, the actual transfer of funds will of course take place 2020.
Yeah, once the final report is approved, like
exactly, yeah, exactly.
And actually, the final report will also be submitted somewhere near, say, end of January 2020, because there is a window of 45 days.
Yes.
After
Yes.
the
Yes.
You can go to 9.5 where we were highlighting 9.5 in your presentation.
I know that your 9.5 is a bit different.
Okay, that's okay. That's okay.
But we already have a plan in place with Vivian, so that's fine. Yeah.
Yeah.
Yours is a bit different to the other MTCCs.
No, fine, because I just wanted to confirm that. That's
yeah.
Okay.
Also, yes, please.
Quick question. Seeing that the table says reason for ineligible expenditure, one of the columns says that the expenditure includes VAT.
Yeah. No, this is not. Just going back to this example I took is in the case of a pagoda. So it's a delegation agreement like the IMO has with the EU. So this criteria is not applicable to you contractors, of course. This is applicable to us when the EC sends us a financial auditor. But I just wanted to highlight some of the criteria that might be applicable in the future should you, for example, receive EU grant funding. Because I'm sure you're all thinking about the sustainability of your respective MTCCs, and the EU has a lot of money. They are still the biggest development aid provider out there. So should you be successful in bidding for a grant, these are some of the things to bear in mind in accordance then with your respective grant agreement.
Okay, thanks for the clarification.
Okay. I just wanted to add, for those of you who will be here in December for the signing of the MOU and the technical workshops, we have set aside also some time for further questions on project management, where should you have questions on financial management, of course, you know, think about those, have them ready, or pose them there. So we will have, I will be there of course, but we will also have hopefully a colleague from our finance department here, and a colleague from our legal department as well, in terms of should you have further contractual questions.
Okay.
Okay.
Yep.
So if there are no further questions, and we are right on time, I thank you all for your time today.